VIA nor myself and Ali make any representation or warranty to the completeness or accuracy of the information in the case study. Okay, so yeah, so we shall start. This is the most important thing. Now, before we start, let me just share with you the structure of this evening's webinar. Now, so predominantly, I'm going to start off talking about the major geopolitical tension that's happening around us so that we are more aware, more conscious. First thing. Second thing is I'm going to talk about how it affects us, yep, as individual. And then the third thing, right, is if it happens, how can we take advantage of it to generate some income, right, including wealth for ourselves. Okay, so these are the three things I'm going to talk about. So I'm going to talk about the first thing, which are the major geopolitical tension. And then in the future, who knows, there's a chance that it may trigger off global recession and may become opportunities for all of us. So there are many, but I'm going to cite three very important ones. Now, the first one, right, is actually the Taiwan South China Sea. That means there's this geopolitical tension between China and US. Now, I think most of you should already know that the red line, right, between US and China is actually Taiwan. Yeah, Taiwan. So if you look at all those pictures over here, it shows all the military activities along this place called South China Sea. So now the question is why it could trigger off a recession. So let me just show you the picture over here, right? Now, this how the South China Sea looks like. So just take note now, in this area, right, Taiwan and the South China Sea sit on the critical shipping lanes, and they are integral to the global high-tech supply chain. I think most of us should know that in Taiwan, there's a very huge semiconductor public listed company called TSMC or Taiwan Semiconductor, who is the largest a chip producer in the world. So any form of disruption, right, will definitely cause a huge ripple globally, and eventually, who knows, if if US comes in and then say, hey, I'm going to protect Taiwan and so on, I think a war may potentially break out. So this is one potential threat. Now, whether it happens or not, nobody knows. Yeah, so we really have to pay attention, right? Then the second thing is all of us already know the war between Russia and Ukraine has lasted very long. So when it first started, I thought it would end in 1-2 years, but in fact, it took longer, right, than I thought. So of course, the war has continued to disrupt energy supplies and agriculture export, but it has been so many years that we may become a bit immune to it. So let me just share with you one specific example how it affects all of us. So for example, in this case, I've cited this deal, right, called the Black Sea Grain Deal. Now, how it works is originally Russia is part of this deal, right, but eventually Russia decided not to be part of this deal. So how does it affect us? Now, if you see here, this place called Ukraine. Yeah, and Ukraine produce grains. Yes, they supply grain. So in other words, in order for Ukraine, right, to ship their grains, for example, to Istanbul, which is a part of Turkey, this is the shipping lane from here and then across the Black Sea all the way down. Yeah, imagine if something happened along this Black Sea, a supply drop, yeah, which means that prices of this grain will go up, right? And then eventually it will affect all of us, yeah, which causes inflation and so on. So now the key thing is why Russia is critical, right, in this path. So just take note, right, Black Sea is in fact a war zone. And Russia has maintained significant military control over many parts of Black Sea. And then interestingly, around, within this Black Sea itself, there are a lot of naval mines. Yeah. And there's also possible missile threat from Russia. So in other words, if Russia is inside the deal, it will be better. But if there's not, it's not so good. So why it could trigger recession? And of course, if let's say, like just now what I say, if the supply of food so-called drop, prices increase, it will cause inflation. Yeah. And then eventually income may drop and then slow consumption, and then eventually all the investment will affect it. Yeah. And right now, many countries are really sanctioning, right, Russia. So I'm really not very sure how long this one will go to last, and will it get better or will it get worse? Yeah. So initially, when Donald Trump became the president of US, I thought he said he's going to end this war, right, in 24 hours. It looks like it's more than 24 hours already. Yeah. So this is the second major geopolitical tension. But let's look at the third one. Yeah. This one, right, is found in the Middle East. And of course, some of you may already know US plan to strike Iran. And then there is already this severe war, right, between Israel, right, and then Gaza. And of course, Israel wanted to attack Iran, right, via US. So a lot of things has been happening. So imagine if you're the Iran's government and then if you threaten, right? So what we do that there's a natural retaliation process. And then just a couple of months ago, Iran parliament actually voted to close this Strait of Hormuz, which is actually a crucial global oil route. So now the question is closing of this Strait of Hormuz, how does it affect all of us? So what I'm going to do is I'm going to ask my team, right, to play the video.
The Strait of Hormuz, it's a narrow waterway, but transits about 20% of the world's daily consumption of oil. And right now, it's at the center of escalating tensions between Iran, the US, and Israel. On June 21st, the US bombed 3 of Iran's major nuclear sites, following a week of airstrikes between Israel and Iran. Tehran has said it will reserve all options to defend itself, raising fears that it could try to disrupt or even shut the Strait of Hormuz. So far, Iran's parliament has reportedly approved the strait's closure. The final call, though, lies with the country's National Security Council. The Strait of Hormuz links the Persian Gulf to the Indian Ocean, with Iran to its north and the United Arab Emirates and Oman to the south. At its narrowest point, it's just 33 kilometers wide, and the shipping lanes are only 3.2 kilometers across in each direction. The proximity to land leaves vessels vulnerable to attack from shore-based missiles or interception by patrol boats and helicopters. Now to why it could impact you. The strait is the world's most important shipping artery for oil. Every day, 16.5 million barrels of oil pass through from Saudi Arabia, Iraq, Iran, Kuwait, and the UAE. Over 20% of global liquefied natural gas flows through as well. Most of it goes to Asia, including China, India, Japan, and South Korea. If disrupted, it could send oil prices soaring and rattle the global economy. But here's the twist. Iran also depends on the strait to export oil, mainly to China, its biggest buyer. Closing it would hurt its own economy and risk alienating key allies.
If the Iranians try to close these straits, the Americans will open it and they will come in contact with the Iranian Navy and a lot more. So that's one kind of war. I would describe that, I guess, as regional war because the Houthis would become involved, pro-Iranian militias in Iraq and Syria would become involved. The Iranians could pursue asymmetrical cyber terror attacks abroad against Israeli and American interests. And we'd witness what we have never seen before, which is a more comprehensive war involving the United States and Israel and Iran.
Right. So you already watched the video, so it's quite severe, right? So the key thing is, if you look at here, right, the 20% of global oil passes through the Strait of Hormuz. And any form of disruption, of course, a supply go down and then price will go up. And then eventually it may trigger off a recession. So these are 3 of the major geopolitical tension that's happening around the world, but there's 4, there's 5, and so on. There's huge number of them. If you look at this map over here, right, this small little icon over here, these are all the major geopolitical tension. So what has it got to do with us? So I'm going to show you a small little tiny picture, which is us. So you can see a Singapore flag over here. So I purposely chose this picture because Singapore is so tiny. It's like a tiny bit of chess pawn, right, or on the chessboard. So it's so small. Anything that's happening around the world is going to affect us. And this is not just some of the serious things. And another serious thing is actually a person, and his name is called Donald Trump. So every single day, Donald Trump wakes up and then he may suddenly think of something new. So just look at the tariff, right, that he has imposed to all these nations. And as time passes, who knows, the number will change. And I still remember one of my role models, his name is called Warren Buffett. He once said that trying to impose all this tariff is actually an act of war. Yep. So in other words, and then there's a new thing that pops out just recently. Trump says US not eyeing war with Venezuela, but some of the action from US, it seems that they are trying to like using a stick to go and poke the bear. Now, what's the reason why they want to so-called poke the bear, which is actually Venezuela? Only Trump will know. Some people speculate that maybe it's oil, and then Trump want to find a reason, for example, drugs to get the oil from Venezuela. Time will tell, right? So many things are happening around us, and then as a small nation, we really are really affected. So if you look at this screenshot over here, you can see the labor chief, NTUC labor chief, Mr. Ng Chi Meng, once said that trying to tell candidates who apply for a job, like, say, hey, you should keep an open mind, consider job opportunities available and stay calm. And then if you read some of the news that's happening around us, do you realize that we are already in an era of AI, right? And then many jobs are lost. Yeah, that's why the labor chief say, hey, right, I think you've got any job, better take. And then if you look at our current Prime Minister, Mr. Lawrence Wong, he said Singapore to set up, in fact, he has already set up a task force, right, to deal with the impact on US tariff. Yeah, so the government is trying to deal with it. Yeah. Whether would there be a possible recession, we do not know. Whether in future would there be a heavy storm coming, we do not know. But the most important thing as an individual, right, we better prepare umbrella, right, in our back. Yeah, so we always prepare for something bad. So if you look at this news over here, which is published by Business Times, yep. So now the question is, all the big things happening around us, how does it affect us, right? Now, so in this article, it says that how much an affluent investor needs to retire in Singapore, right, versus other countries. So you look at the ranking, so do you realize that number one is US, second one is Singapore. So in other words, in order for an affluent investor in Singapore to retire, you will require this amount. Now, bearing in mind that this US dollar, right? Yep. So maybe Sing dollars is about 1.8 million. Yeah, 1.8 million. Yeah, I think this is the minimum, right? So on one hand, there's macro things that's affecting us. And then within Singapore itself, there's a high requirement for us to retire just behind US. Yeah. And then recently I came across one article, right? And you read something like more seniors remain employed after retirement and re-employment age raised in 2022 MOM study. And if I zoom into the article, there's one specific part, right, which looks something like this. Take note. Now, the Retirement and Re-employment Act enacted in 2012 has been revised several times. In fact, it's increased, right? So bringing Singapore closer to its eventual goal. Yeah, remember, raising the retirement age to 65. But this is the most tough part to absorb, right? The re-employment age to 70 by 2030. Now, we're just a few years away from 2030. Now, the moment I read this sentence, I could imagine, right? At age 70, do I want to send out a resume and then get myself re-employed? I think I shouldn't. So remember, right, the storm is coming. So now the question is, how do we prepare ourselves? Now, I like this quote from Jack Ma, right? He said, always repair the roof when it's sunny. Yeah. Then another famous value investor, he's already passed on, his name is called Sir John Templeton. He once said, if the storm is coming, in a sense that of a stock market, right? Now, for those who are properly prepared, the bear market is not only a calamity, but an opportunity. So I'm going to focus on this word prepared. How do we get ourselves prepared? Now, there are a couple of things we can do. First thing, right, before the storm comes, before opportunity comes, we must know what to do. Next one, we must know when to do. And of course, the last part, we must know how to do it, which is why we organize this webinar, right? Yeah. So what is going to happen, right, is we're going to provide some answers of how we can know what to do, when to do, and eventually how to do it. Yeah. And of course, over time, throughout this webinar, I'm going to talk about how VIA LS can help all of you, number one, to save more time. Because ultimately, we do not want to work forever, right, until the re-employment age of 70, so that eventually we can spend more time doing the things that are more important and more chill, right? And number two, of course, save more money, because at the end of the day, who want to lose money, right? And of course, the last one, which is the most critical thing that we're going to talk about tonight, is how can we grow our money. And here we're not talking about fixed income. Yeah, we're talking about passive income, so that at the end of the day, we can retire at least 10 years earlier as compared to our peers with more money. Yeah, so these three things that we're going to focus, right, for tonight. So in order for us to prepare for opportunities, there are three simple steps. Step number one, right, is to know how to construct a business portfolio so that this portfolio pays us and we can retire earlier. Step two, right, what companies to look for so that we can put inside this portfolio that could pay us capital gain, which could possibly a few 100% in the long run, pay us dividend if we need the money regularly. And last one, right, which is selling of options. Yeah, this is the only income that comes in instantly, right, without any waiting. And this CFOS stands for cash flow option strategy. We're going to share more later on. And of course, how can we provide ongoing support for all of you? Okay, so let me just get started with step number one, constructing a portfolio. Now, before we talk about constructing a portfolio, it's important for us to know how does a portfolio look like, right? There are two extreme ends of a portfolio. Now, the first type of portfolio is belonging to a passive investor. So in other words, if let's say this portfolio, right, this whole circle represents 100%, which may be 10,000, 25% of 2005, right, will be existed, right, in the form of cash. And then the rest 75%, they may consider something called ETF, which stands for exchange traded funds. Now, we'll cover more later on. And then on the other side of the spectrum, right, it could be cash, and then everything is all stocks or businesses. So Warren Buffett belongs to this category. Okay, so I'm somewhere in between. My portfolio looks something like this. Consists of cash, consists of exchange traded funds, and then stock. Yeah. So we're going to zoom in right to the middle part. Since there are three segments, cash, ETFs, as well as stocks. So now the key thing is if most of you belong to the middle type. Yep. So what kind of ETFs are we talking about? What are ETFs? And how can we invest in the ETF? Yeah. So with that, just to let you know that for this evening's webinar, I've invited a very important person. His name is called Ali. He's also the instructor, right, of Value Investing Academy, and I'm very thankful that he's at his precious time tonight to share with you, right, how to invest ETFs and what are the possible ETFs that you can really get yourself being educated. Okay, so with that, I'm going to hand my time to Ali. Thank you.
Hello, everyone. Very good evening. Thank you for joining me and Cayden in this webinar. Let me start off by sharing my screen very quickly. Identifying opportunities in this volatile market. Okay. Good evening, everyone. My name is Ali, and today I will be talking about how to catapult your investment using market-beating ETFs. Right? That's my job for today. So, how to catapult your investments. Let me start my story with a little bit of a unique twist. Let's look at this image. So this image shows us the richest people in the world. Quick, who comes to mind when somebody asks you who's the richest people? You may think Elon Musk, you may think Jeff Bezos. But one person who quietly sits on the list and has been there for many, many years is this man, Warren Buffett. Cayden has already mentioned Warren Buffett before, and I think you will hear from me Warren Buffett quite a lot. Why are we talking about Warren Buffett as well today? Because Warren Buffett actually does the thing that I am going to be talking about. And he has some unique things to say when it comes to ETFs. Okay, so Warren Buffett has some advice that you and I, layman people, can do when it comes to ETFs. And instead of me beating around the bush, let's just hear directly from the horse's mouth what Warren Buffett has to say about ETFs. Okay, so I'll hand it over to the team. Let's play the video.
I think it's the same thing that makes most sense practically all of the time, and that is to consistently buy an S&P 500 low-cost index fund, keep buying it through thick and thin, and especially through thin, because the temptation gets, when you see bad headlines in newspapers, maybe to say, well, maybe I should skip a year or something. Just keep buying it. American business is going to do fine over time. So you know the investment universe is going to do very well. The Dow Jones Industrial Average went from 66 to 11,497 in 1 century, and then since that century has ended, it's more or less doubled again. American business is going to do well. The trick is not to pick the right company; it's to be, because most people aren't equipped to do that, and plenty of times I make mistakes on that. The trick is to essentially buy all the big companies through the S&P 500, and to do it consistently, and to do it in a very, very low-cost way, because costs really matter in investments.
Yeah, so as I was saying before, to be honest, in that video, 10 years ago, if I was watching the TV and I saw this old man talking about everything that he just mentioned, all of it would just fly past my head. None of it would register. But now, after joining value investing, understanding how the investments work, how the world of investments work, actually that short video clip, Warren Buffett drops pearls of wisdom. Right? And if I could summarize in one quick sentence what that video is all about, what Warren Buffett is saying is put 10% of the cash in short-term government bonds. So you're building a portfolio, put 10% cash in government bonds. 90% in a very low cost S&P 500 index fund. Right? Now, this one sentence is what I will try to decipher for you today. 90% in a very low cost S&P 500 index fund. To understand that, let's understand this question first. What is an index? Okay, so here you can already see the Uber company. This just happens to be the day that Uber listed its company shares on the stock exchange. And the stock exchange is one place where you and I can go to buy individual shares of a certain company. But now the stock exchange in today's world is not one stock, 10 stocks or 100 stocks. It's in the thousands. And what if I wanted to find out, is the market as a whole going up or is the market as a whole going down? Right? Sometimes it can be difficult just looking at all of the market. So look at this picture here. We can see some companies have gains, some companies have losses. How do I guess as a market whether the market is going up or down? Or if I can say in investors' terms, how do I know if the market is actually in a bull market or a bear market? I need some sort of indicator. So what I can do is maybe what I can take is the stock prices of big companies. And let me average out the stock prices of these big companies. And if I do that, what I will have created is something called an index. So I look at the average stock prices of these companies, I pull them together, I look at this entity, I'll call this entity an index, and now I'm able to track from the average prices of these companies whether the market is going up or going down. Okay, so far index is a very academic exercise. It helps me to look at the market going up and down, but how do I invest into that market? So that's where this term index fund comes about. Because as you can see in the picture, this man taking a picture of the market board, what actually index funds do is index funds, they take the funds from their pool, their own money, and they copycat the index shamelessly. Right? Why do they do this? So if I have money and I want to invest that money in the stock market, especially if I want to look at the stock companies as a whole. So I have a fund. What can I do with the fund? What I'll do is I'll track the index. Index goes up, my fund will go up. If the index goes down, my fund will go down. This index fund allows me to track the index and to go up and down as a layman. But, or rather as a money manager. But not all of us are money managers, right? You and I, we are laymen. How can I also track the index, also create a fund that follows the index? When the index goes up, I earn money. When the index goes down, also my fund goes down. So easy answer for this is I can follow something called an ETF. An ETF is an exchange traded fund. So the idea behind this is, other than a money manager controlling his or her own funds, what I can do is I can follow this fund, list it in the stock market where people like you and I can also buy shares into this fund. And this is called an ETF, exchange traded fund. So basically an exchange traded fund is nothing more than me buying individual stocks in and out. But it's also very similar to what managed funds are like, what money managers out there in the market do. And what exchange traded funds allows me to do is to actually buy and sell just like index funds or just like managed funds, right? Okay, so this is just a quick introduction to talk about ETFs and what ETFs are all about. So ETFs are basically copying what the index does. In this case, we want to copy what most of the companies are like in the stock market. Let's look at some example ETFs. Okay, I'll put this picture up there. I'm not sure if just by looking at this picture, you can guess what ETF this is. So you'll see the market prices going up and down, now in the $1,000 range. Take a second. Can you make a guess? What is this ETF that is available for you and me to buy? In the long run, of course, most ETFs will go up. This ETF of concern, we can actually see this ETF makes 7.53% gains per year. Okay, and this ETF is none other than the ST index, and ST stands for Straits Times, which is Singapore-based index. So just looking at what I previously described academically about what index funds is, this index here, if you were to invest in this index, basically when the index goes up, you earn together with the index. Index goes down, you earn together with the index. But in the long run, most of the times, the index will always be going up. And we can see here, actually, since 2002, this fund, or rather this index, has been growing by 7.53%. Okay. What is another index that we can look at? And this one is a bit more popular index. So this index is called the Standards and Poor 500 index. And if you were to trade on this index, you can trade using an ETF. And I'll talk about the ETFs using that follow or copy the Standards and Poor 500. Right? So this index also similar story with the previous one that I shared. In the S&P 500, we have ups and downs, ups and downs. So when there's a bull market, it goes up, bear market, it goes down, recession, it goes down, then another bull market, then go up, go down, go up, go down. But this index a bit unique. This index, when we look at it, actually has a bit more of a steeper curve, right? Or a steeper climb. And if we put it into numbers, actually we can see that this index grows by 10.4% per year. So S&P 500 compounded annually, looking at the returns with dividend reinvested, you can make 10.4% per year. Okay, where did this 10.4% come from? Very easy. What I can do is I can look at Berkshire's performance versus S&P 500. This is a chart that Warren Buffett is very famous for sharing, because in his annual booklets or annual reports, you will always see that he compares how his fund does compared to the S&P 500. You don't have to read for each year what the gains and the minuses are, but I just summarize for you. In a nutshell, since he started his own Berkshire Hathaway company, and since he's been tracking the funds of his own or the gains of his own company together with the S&P 500, what we can see over here from this chart is the S&P 500 will make 10.4% gains per year. Of course, Warren Buffett is another league of its own, 39,000% gains every year, right? But Warren Buffett doesn't actually track the market. Warren Buffett individually will buy stock. He knows when to sell, he knows when to buy, and he's been doing it for years. Yeah. So S&P 500 is going to be a topic of concern for today, right? So if you've never heard of S&P 500, after this, definitely go and Google. The idea behind S&P 500 is we are looking at the 500 top companies, and we will average out their share price to see whether the five companies as a whole is going up or going down. Okay. Let's look at this chart. So in this chart, I can see that the S&P 500 is showing from 1980s all the way to 2015. Can you see? There's actually an interesting phenomenon happening over here. From 1970s to about 1995, it's just been like an uphill climb. But then it reached the peak in 2000. Then after 2000, it dropped. Right. So in March 24, that was the peak, 1,527.46. Then after that, it dropped. It dropped all the way down to 800. Right. So we can say that it dropped by 47.6%. Do you know what happened in the 2000 that made this drop occur? Some of you probably have also lived through the experience. This is the dot-com bubble crash, right? So internet was booming. All of the companies were starting some sort of internet company, and everyone was selling the shares of their company, and the share prices kept going up and up. But we realized that it was actually a bubble. The bubble was about to crash because these companies were not really earning any revenue, not even making money. And when people realized that, they started to sell off the shares, and then there was a drop in the market. Yeah. This drop was 47.6%. But interestingly, after that, the market went back up. That means as a whole, S&P 500 went back up. 500 companies went back up. And not only that, if we compare to the peak that it reached in 2015, you actually, if you had bought at this point here, at the lowest point, you can actually double your money. So just by investing in the S&P 500 index, whenever there's a drop, you see the next hill is actually almost 100% gain. And we see this pattern actually repeat throughout history. So you see all these lines over here are showing you when the bear market happens, when there's a drop in the market. And if you were to invest in those market at that time, stay in the market until now, you will see that you will only be going up, up, and up. So just looking at the S&P 500, actually we can look at some trends, right? We can see, we can learn some lessons. Some lesson, the first lesson is after every bear market is followed by a bull market. So while the bear market happens, it may be doom and gloom. Oh, dot-com bubble crash, doom and gloom. But actually followed then is a bull market. We can also see that the bear market is usually shorter than the bull market. So the bad times, if we were to call the bull market the bad times, is 9.7 months. But then the bull market, 2.7 years. Yeah. And also, every bull market is usually higher than the previous bull market. So S&P 500, one reason why we are paying attention to this index fund is because of this peculiarity, where every bull market is usually higher than the previous bear market, previous bull market, right? So when it was high, went down, then it went higher than the previous high. And in the last 94 years of market history, only 21.6% are bear market. So in the 94 years, actually it's been bear market shorter than it's been bull market. What does this tell you? What this tells you is what Warren Buffett likes to say is there is no way you can bet against America and win. And the S&P 500 is a very clear trend to show you that the US companies together will always go up, up, up. Even if there's a bear market, it will convert into a bull market in due time. Right? So if we were to track the S&P 500, we can see it going up in this manner. Let's talk about the S&P 500. So now, again, S&P 500 is the top 500 companies, right? What do I do with that? So some assumptions before we put our money where our mouth is and start investing in this. Some assumptions is, firstly, US will continue to prosper in the long run, no matter what will happen. Yeah. And secondly, you invest consistently and live long enough to see the long-term growth. So that means you are not scared when there's a bear market, you pull your money out and then you cry, or when it's bull market, then only you invest. But actually, you must invest consistently. If I make these assumptions, what will happen? Let's see. So before we go into that, also one thing that I need to talk about is the components in the S&P 500. The S&P 500, the 500 companies, what is the weightage of the different types of companies in this chart, or rather in this S&P 500? So we can see, of course, the biggest pie chart here belongs to information technology, which is trying to say that those IT companies out there have a huge say in the direction of the market. But quite evenly spread out amongst the rest as well. We have financials, consumer discretionary, communication services, healthcare, industrials, so on and so forth. So S&P 500 is a nice weightage of the various types of industries and also the companies out there in the US stock market. Okay. Question now is, okay, I know all of this about S&P 500. I've seen the trends in S&P 500. 10.7, 10.4% gains we can get from S&P 500. So if I invest in the S&P 500, I can see that it's pretty diversified and I can see that the trends keep going up. In the previous slide also, I showed you every bull market, there's a bear market, but then if you stay invested, the bull will be higher than the previous bull. So what do I do now? I need to invest in the S&P 500, right? Let me steal a word that you may have heard from the video where Warren Buffett says, what you need to do is to invest in the S&P 500 through thick and thin. Thick and thin. What does that mean? That means low, also I invest. High, also I invest. The best way to practice this is a type of investing called dollar cost averaging. So how do you invest in an ETF? You can do something called dollar cost averaging. Now, if you're hearing this for the first time, what is dollar cost averaging? Let me tell you, it's quite simple to understand. Instead of us picking the right time for when to invest in the market or picking the right companies, firstly, we know we can just look at the S&P 500 because it's looking at the market as a whole. And over the years, S&P 500 has gained. Now, instead of picking the time when to invest, actually what you can do is dollar cost averaging, which is to invest in a fixed amount of money into an asset class at a fixed time interval. Two very important things here. Firstly, fixed amount of money. And the secondly is the fixed time interval. Okay, so if you are not a pro at buying stocks like Warren Buffett, you dollar cost average into this ETF, into this S&P 500 ETF. Let me give you an example of what dollar cost averaging will actually look like. Month number one, invest US $100 into S&P 500 ETF. Month number two, invest US $100 into S&P 500 ETF. Month number three, guess what must you do? Same, invest US $100 into S&P 500 ETF. And to be honest, it doesn't matter. Every month, if you decide that I'm going to invest this amount of money, then every month you must be investing this amount of money, fixed time interval. Okay, so what this allows you to do is to invest into the ETF through thick and thin, like Warren Buffett likes to do. Okay. Now, S&P 500, what I gave you was a summary, right? 500 stocks. But when it comes to ETFs, and you search for S&P 500 ETF, you will find that actually there are many people with many different kinds of ETFs based on the S&P 500. And they all are different companies with their own name. How do I know which ETF is good? How do I evaluate whether the ETF is good? I know I want to track the S&P 500, but some ETFs have this much gain, some that much gain. Which one is better than the others? So a very easy way for us to understand ETFs or understand which ETFs are good is to actually look at these four markers. First one being expense ratio. How much of the funds are used for admin and operating expenses? The lower, the better. So expense ratio, think of it as you are paying fees to the money manager who takes a bit of money from you to manage this fund. That's expense ratio. Dividend withholding tax. So the dividend from the fund also, there's withholding tax. For US ETFs, it is 30%. For Irish ETFs, it is 15%. Wow, double. I mean, almost half. But does this matter? We'll see later on. Next, you need to also understand and you need to also study this thing called accumulating and distributing dividends. So accumulating dividends basically means when you invest in the fund gives you a dividend. That dividend is accumulated, reinvested for you. That means it doesn't come into your pocket. It's just automatically reinvested for you. Distributing means the dividend is given to you. Okay. But this one for us, actually both is about the same. Because remember, we want to do dollar cost averaging. So accumulating means they are going to keep the money and they will invest $100 for you every month. Distributing means the money comes to you, but you take the money and you just invest it back into the S&P 500 fund. Right? So that's accumulating and distributing. Then we have broker's fees. Of course, broker's fees, lower the better lah. Using these terminologies and using these markers to evaluate ETFs. Now, if you go onto Google and you search for ETFs, you'll find many different types of S&P 500 ETFs. Now I can use this to evaluate which one is good, which one is bad. Okay, let's look at some examples. So I have some examples of S&P 500 ETFs here. Here you will see the first one is SPDR S&P 500 ETF Trust. The ticker symbol, SPY. Then you have Vanguard S&P 500 ETF, you have iShares, blah, 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 blah. They all have a ticker symbol, and I'll share the ticker symbol with you in a while. But what we can also see that there's different dividend treatment, different withholding tax, and different expense ratio. How to know which one is better? Let's start with the expense ratio. So remember, the first thing we want to see is lower expense ratio is better. Very quickly, I can see SPY 0.09% expense ratio is one of the high ones. I don't want to look at this stock anymore. Next one is iShares Core S&P 500 UC ITS ETF. This has 0.07% expense ratio. So again, quite high compared to the rest. So I don't want to look at this anymore. In fact, from the expense ratio, we can see, I already highlighted for you, yellow color, is SPDR Portfolio S&P 500 ETF. Has the lowest expense ratio. So I'm interested in this ETF. Okay. But other than the expense ratio, there's also withholding tax. Although this one, the expense ratio is 0.02%, the withholding tax is 30 because this is US domicile ETF. On the other hand, there is another ETF here, SPDR S&P 500 UC ITS ETF. The expense ratio is 0.03%. It's just like 0.01% higher. But hey, look, the withholding tax is half, 15%. So these are two ETFs that I will be concerned about, that I want to look into. The others I can dismiss because the expense ratio is higher. Right? What are the ticker symbols now? So let me quickly share the ticker symbols. So Vanguard is called VOO. iShares Core is called IVV. SPDR portfolio, S&P 500, this is called SPYM. And just to let you know, those people who have maybe researched on some ETFs before, actually there's a ticker symbol change of this ETF. Previously, it was called SPLG. Okay, but we are going to use the new name given by the company, which is SPYM. So this is the ticker symbol given of this stock. And then, of course, the next one is SPYL, and lastly, CSPX. Okay, so just looking at this chart, and remember the 4 pointers I told you about. If we look at expense ratio, we look at withholding tax, we look at dividend treatment. If I just look at these things, I can already start removing some of the ETFs and focusing only on some of the ETFs that are good, which is like SPYM and SPYL. Let's compare these two now. Which one is better? So let's see which ETFs fare better. Okay, now to do this, I'm going to make some assumptions. One is I monthly invest $100 for 10 years, the previous 10 years. And I assume that I get an annual 10% annual return from these funds. In terms of dividend yield, SPLG gives me 1.24%, SPYL gives me 1.5%. If I compare the two, so SPLG, remember, is the one with the lower expense ratio, but higher withholding tax. And then SPYL is higher expense ratio, but lower withholding tax. That withholding tax, because it's in another country, remember, is going to be only 15%. That being said, if I were to invest US $100 for 10 years and I do this consistently for each of these ETF, actually one of these ETF will outperform the other ETF. Can you already see that? Yeah. So if we see actually SPYM, now my picture shows SPLG, but remember they changed the name already. Yeah? So the ticker symbol is now SPYM. SPYM slightly edges out SPYL by around 200 years after $200 after 10 years, not 200 years, by around $200 after 10 years. And the lowest expense ratio offsets is higher dividend withholding tax. So SPYL is Ireland domicile ETF. That's why the withholding tax is 15%. But because the expense ratio is lower for SPLG, actually SPLG outperforms SPYL. Let's look at dividends. Dividends will make a modest difference. Total returns are mostly driven by capital gain, by capital growth. So although the dividend yield is a little bit off, doesn't quite matter. More importantly is the expense ratio first, and that you dollar cost average. Then also take note, I made an assumption here that I did not take into account brokerage fees. So whatever you are using, whatever platform you're using, we assume those fees are non-added into this study. And lastly, also assume that past assumptions may not equal to future market results. So we are looking at the past 10 years. Okay? Okay. A bit technical, a bit academic. Let's try to summarize what we have learned. So we started off talking about ETFs, and we looked at one example, which is the STI, which is Straits Times Index. And if you were to get the ETF, you will only be getting about 7.4% returns per year. And we know that there are better ETFs out there than STI, right? And there are better index funds out there like the S&P 500 index fund. And we looked at some ticker symbols like VOO, IVV, SPYM, and SPYL, and we know all four are better than STI, right? But if I were to invest $100 monthly, and I can either do this manually or automatic using any brokers, we can see SPYM will outperform. So since its inception on November 8th, 2005, the SPDR portfolio S&P 500 ETF SPYM has delivered the following annualized total returns. Since inception, 10.55% per annum, and market price return is 10.54%. So almost identical. Okay, so one ETF that we can look at, if we look at the ticker symbol, it'll be SPYM compared to STI. Right. So wait, is that the end of the story? Should I just go out there and now invest into this ETF? What if I were to tell you, actually, there may be a better ETF compared to SPYM? Right? What is that ETF? Let me quickly show you. That ETF is called QQQ ETF. It's a When the first time I heard this, I thought this is a very cute name for an ETF. Very easy to remember as well, right? Triple Q or QQ or QQQ, many different ways you can say it. All said and done, the ticker symbol is QQQ. Now, this ETF actually outperforms the previous ETF that we talked about. But before we go into how much it outperforms, I just wanted to quickly say one reason why it may be why it outperforms is if we look at the makeup of this ETF is a bit different than the traditional S&P 500 fund, right? Here you can see almost 50% or just slightly over 50% is 7 companies, and these companies we know are all the fast growing tech stocks, right? So Nvidia, Amazon, Alphabet. And one reason why we are looking, or one reason why QQQ has grown in the past decade is these companies have all surpassed expectations set on them, and they have been very good at growth. Right? So QQQ very heavily biased on the technology sector, and that has allowed it to outperform other ETFs in the past decade. Right? So let's look at this chart, right? So if I look at yellow line is QQQ and the blue line is VOO. Assume I started investing at the same point. If I look since 2021, if I were to continue to invest into QQQ and VOO, the VOO, which is the Vanguard fund, will only give me an increase of 95%, 95.27%, whereas the QQQ would have been 114%. Right? So QQQ, the increase would have been 114%. But of course, some of you may be looking at this and seeing, well, the two lines are QQQ really goes down, really goes up. So you may say in layman's term that this QQQ is more volatile than VOO. But actually, don't get too scared about the volatility. What you must understand is what drives this volatility. And for QQQ, remember, they are a technology focus, more than 50% in the top 7 companies. So there may be times in certain years where these top 7 companies are not performing very well. But on average, when you were to track its performance over the past 10 years, you can see actually it would have given you better gains because the technology companies will come back up. Right? So let's put this into our comparison chart. So earlier I started off talking about STI, and STI only gives us like 7% or so. So we went to another market, the US market, and we started looking at another fund called the S&P 500 fund. And if you wanted to invest into the S&P 500 fund, you could just look for an ETF that copycats the S&P 500. And we looked at 4 such ETFs, right? VOO, IVV, SPYM, and SPYL. And SPYM outperformed these other ETFs because the expense ratio was very low. But now we have just discovered that QQQ actually outperforms SPYM. Yeah. And QQQ, one reason it's able to do that is because it's very technology centered, more than 50% on the top 7 companies, and they are very heavily driven by technology. When the market is good for them, QQQ also will gain. Yeah. But wait, there's more. This is QQQ. What if there is a better ETF than QQQ? We should invest in that ETF, right? But to find out more about the ETF, actually, I'm now going to hand over back to Cayden to continue the story. Okay, so Cayden, handing it back to you.
Yeah, so by the way, thank you, Ali, right, for spending time making preparation, and of course, just now I saw a lot of questions, so as much as I can, our team has attempt to reply them. Okay, so let me just carry on from where Ali has left off, because our time is quite tight, so we have to say as much things as possible. So what I'm going to do is I'm just going to do a very simple comparison, right, between investing in a low-cost S&P 500 index fund that was mentioned by Ali versus putting money in the bank. Okay, so what you're looking at the screen right now is a very simple compound interest calculator. So for example, this first 10,000 over here, right, is the current principal. So in other words, if I pretend that I'm going to start investing today and then I put in 10,000, so this will be the principal amount. And then at the beginning of every year, let's say 1st of January, I decided to put in another 10,000. Okay, and then let's say I do this act for 20 years. Yeah, and then I put the money in the bank, and let's say the bank, some plans a fixed 2% interest for 20 years. So if we press this calculator, eventually at the end of 20 years, we will have this amount of 262,000. Yeah, so that is assumption for this scenario number 8. But let's say if there is a X% population, right, in Singapore, they are more well-versed, they are not really a retiree, they still have maybe 20, 30 years of runway until the end of the retirement, right? And then if they choose to put in the low-cost S&P 500 index fund, but just to let you know that there are some S&P 500 index fund that is high cost. For example, a popular one is called SPY. Sometimes people call it SPIDER. So the expense ratio is actually 0.09%. I mean, versus a SPYM of 0.02 and then versus a VOO at 0.03. So SPY, right, the expense ratio is actually 3 times higher. Yeah. So let me just put it aside. Let's say there's a scenario B. Some people are more well-versed, more educated. We all know that if somebody is more educated, they have more choice. Yeah, if they do better results in our school, usually they have more choice to choose whatever school they want. And assuming that the principal is the same, yeah, annual addition the same, the number of years to grow is the same. But this time around, we're going to use 10% as a projection. And then we put into this low-cost S&P 500 index fund. Yeah. So, and then if I press this calculator, do you realize that the amount is no longer 262, right? By 697,000. Yeah. And if I take this 697,000 minus 262, right? What is the difference between using the same resources, but we make a different choice? Now, the difference is 434,000, which is a lot of money. I think practically you can buy a HDB flat now. And then in terms of percentage, the difference is 165.44%. Now, I'm going to pause here for maybe 5 seconds for you to digest. Yeah. Now, why do I want to pause here and digest? We have to really ask ourselves, in a general population, which category do they belong to? Most people, would they belong to A, put money in the bank, or most people, would they belong to B? Yeah. At least for my past 17 years of experience when I started VIA, for most people that I know, they actually belong to A, which is why you see that in the very beginning, I talked about the re-employment age is going to increase to 70 by 2030. And then our retirement age is going to increase. Over time, unfortunately, we just have to work longer, right? If we lack the knowledge, invest. Yeah. So this is one example. And here we are talking about 10% low-cost S&P 500 index fund. But what if in the long term, and we're going to use, let's say, QQQ as an illustration, okay? So same thing, the parameters remains the same over here. You press calculate 262, right? And then we're going to use a QQQ as an illustration. Yeah, so at least based on the past 5 years, QQQ has doing quite well. It's 18%, but of course, over time it may be higher, it may be lower, but we are just using this as a comparison. So same parameters, but this time around is 18%. So do you see here is 2 million? Now 2 million versus 262. In terms of absolute difference, is 1.7 million. Yeah, in terms of percentage difference, it's 662.92%. So again, I'm going to pause here for 5 seconds. Yeah, it is quite difficult to convince anyone, right, not to invest. Yeah, I mean, the only possibility is somehow in their mind, they just want the 2%. If that's the case, it's really quite hard to change that. But anyway, I suppose people who are watching this, they're all adults. So it's a matter of choice, right? Okay, yeah. So let you know the difference is huge between people who know and people who don't. Okay, so let me just move on. So now the key take is this was the slide where Ali left. So are there things that are more than QQQ, more than the low-cost S&P 500 index fund? By the way, just to let you know that in this universe, there's no such thing as get rich quick. Yeah, the simplest way of investing is actually like what Warren Buffett just said. Is actually a low-cost S&P 500 index fund. Yeah, QQQ. Just take note. Ali has just said that the QQQ is volatile, so your time horizon need to be very long. Otherwise, you'll be affected by the price swing. Yeah, so if you're affected by pricing, then maybe QQQ is not suitable for you. Okay, then a low-cost S&P 500 may be better. So now the key thing is there something more? Now, on this note, I just want to let you know that if we wanted more return, we have to learn more. Because in this world, there's no such thing as, oh, I want to make more return, but I know nothing, or I know little. Yeah, it cannot be, right? Yeah, there's no such thing. Yeah. So it's very important that we need to learn more, right? Which is why this entire webinar is here for. So let me just come back to here, right? Let's do a quick recap. Now, in order for us to build a rock solid portfolio that will withstand any form of storms, good times, bad times, right? We must first understand ourselves. Are we a passive investor on one end of the spectrum, or are we an active investor? So passive investor, in short, the attribute, the characteristic of such investor is, I don't think I have the genius or the talent to pick individual stock. Yeah, I just want to put some money in the bank, 25%, 30%, and then the rest are low-cost S&P 5 index fund. Or some people, you may just like our local SDI tier. That's it. We stop. You'll still be better than an average person, right, who don't invest at all. So that is a passive investor. Active investor require a lot of effort, because here we are talking about buying individual stocks. You need to analyze, and then if you have not taken any courses on how to analyze companies, how to interpret financial statements, and then your stock taking skill is based on YouTuber, influencer, all this, I think it's better that you leave the money in the bank. Yeah, or not suitable. Okay, not suitable, right? But if you have some knowledge, then you may consider having some cash, like what Ali had just said, the ETF, exchange traded funds. And then here, right, here, remember, you need extra knowledge. Okay, individual stock picking. Yeah, so I'm going to focus on the hybrid approach, in which we're going to talk about stocks. So now the key thing is moving forward. How do we catapult our investment, right, using VIA Atlas, which in fact is an educational app. Yeah, just take note, we do not provide any stock advisory services. Yeah, because we are not licensed by AMF to do so. But we want to educate the general public to be more well informed. Yeah. So how do we do that? Now, remember, right, in the very beginning of this webinar, I said it's very important for us to repair the roof when it's sunny. Now, no one will ever know when the next recession will come, will the AI bubble burst, nobody will know. But we must always be prepared. Okay, so how do we prepare ourselves again? This is a reiteration, right? Remember, we must know what to do, when to do, how to do it. And we strongly believe that our VILS, which is we have an app application and also a desktop version, can be of service to you. Yeah. So how VIS Atlas can help? 3 points. Number one, we help you to save more time, because there's a lot of work involved in analyzing company. Yeah. Second thing, you save more money. Yeah, nobody want to lose money. And last one, hopefully by being more educated, you can have more passive income, and then we can retire much earlier with more money. Yeah. So this is our end point. So now the question is, how do we educate our members to reach the 3 objectives that we have shared? So remember, 3 steps. Number one, we must know how to construct portfolio. And I have already talked about the 3 types of portfolio, right? Yeah. Now, the second thing in which I'm going to talk about is step number 2, right? What companies to look out for and how VILS can help. Yeah, so that eventually we can learn about capital gain as well as dividend. Yeah. Okay. And last one, which is very few people know, right? For example, if you're a retiree, and let's say I assume that maybe some of us are watching this video, you 60 plus, you could be 70, and then you reach a certain age, it's quite hard for us to know, will we be around 5 years, 10 years, 20 years down the road when you reach a certain age. Yeah, the average, I think male, right, and female is about early 80s. So it's really hard. It's really hard. Yeah. So if people are worried about, oh, will I be around for next 1 year, 2 years, 3 years, 4 years, and you're focusing on income, then step number 3 is very important. But let me finish step number 2, which is the capital gain as well as the dividend. Okay. So just now we already talked about these 3 portfolio, and I'm going to focus on the stocks part, right? Now, I'm not very sure people are watching this. Are you our graduate of our value investing program, or are you not our graduate? But it doesn't matter. Now, just to let you know that in case some of you are our graduate or our value investing program, we have access to a lot of free tools that we have. And we have been providing these free tools for the past 15 years. We never charge a single cent. So what they can do is they log into the portal that's given to them. They can answer a psychometric question, like, for example, oh, do you have time to analyze company? For example, they may circle. Number 7, how much are you willing to lose your investment? Let's say they circle. Number 6, have you set aside enough cash to support your loved one? They circle. Number 7, is your income stable now? The answer. So there's no right or wrong, right? The individual will do a psychometric test. They can put a score. After that, they just press submit. Yeah, so maybe in about 2 seconds, so the system will auto form a portfolio allocation for education purpose. So in this case, you can see cash, you can see the ETF, which is over here, and you can see stocks. Now, so in case some of you are are not our graduates, you may consider half-half. After minusing 25% cash, maybe half is CTF and half is stock. So we can let you decide. Okay, so now let's come back to VI Atlas because the intention is to educate us, right, about individual companies first, before we talk about the CFOS. Okay, so if let's say some of you are already our member, then you can go to a website, and then of course our dream is to help individual invest at the fingertips by educating them. So what they can do is they can click on the login, and of course they will log in. So now the key thing is I'm going to ask my teammate to play this video, right? After you have logged in, how do you build a portfolio? Okay, so I let my teammate do the work. You reach a portal that looks like this. It's quite easy to maneuver. You may, on the left-hand side, you may be able to see a one-page IV directory. And this is the cut view, this is the list view. I'll show you how it looks like later on. But let's focus on the right tab. My US Case Study membership portal. Click on the right side. Yep, and you'll be able to see our upcoming gatherings, any updates, June, May, and so on. So if we keep scrolling down, you'll be able to see a VIA Atlas onboarding video. And this video will tell you exactly what you need to do, how you're going to use a VIA Atlas and so on. And the most interesting thing is we have macro news update over here. If you want to revise our value investing program, you can click here, or CFOS here, so you don't really have to come on site to our office. And since we are focusing on asset portfolio allocation, you can see this tab over here. You just need to click go to course, wait for the page to load, and you left click play course. And these are the modules. So for example, the module 1, we talk about Singapore saving bonds. Yeah, so if you are living in Singapore, this will be quite useful. And here we talk about ETFs. And of course, the last one is how to set up the auto recurring investment, right, using interactive brokers. So of course, I can always let the video play. So you can see setting up is only 4 minutes. And if you want to come back and revise, any of the modules are all here. So this is one very important component of how VIA Atlas can help you, right, to build an asset portfolio. So remember, right, I have no idea whether you're a graduate or not, but let's assume they are graduate or not graduate. There's actually an online value investing bridging course. Yeah, remember just now I said that there is no way we can buy something without knowing anything, including buying a pair of shoes. We still have to check the pair of shoes, the shirt, whatever, before we buy anything. So it's important for us to learn something, before we buy something. Otherwise, it becomes pure gambling or speculation. Then there's also another module, right? Regardless of whether you are our value investing program grad or not, we also have this cash flow option strategy. Take note, what we do is we do not do option trading, which is a pure speculation in nature. So we only write options or we sell options, which are predominantly the same. So there is actually an online module where you can watch at your own free time. But of course, when you log in, you can always watch together with your spouse, your kids, and so on. And here, there's also a guide, a step-by-step guide on how to use the interactive brokers. The reason why we talk about interactive brokers and not other investment platform, right, is because via our value investing program, just too many platforms, so we can only choose one. So it's just by chance that we are using interactive broker. Okay, so that's one. Now, then, of course, in case some of you are not our value investing graduate, you find this topic very interesting, you can always at valueinvestingacademy.com. Okay, so let me just carry on. Now, remember just now inside the demo video, we talked about clicking on this asset portfolio allocation. You're looking inside the 3 modules and so on. You can always watch at own free time. So number 1, we already talked about it. So we're going to focus on number 2, right? Just now we are still at number 1 actually, but because we talked about the videos pertaining to asset portfolio allocation. So now, okay, I already checked off the ETFs and so on. We already understood how I'm going to build my portfolio, what's my endpoint is going to be, right? So what are the companies can I slot inside the stock? Are there some places where we can learn more about the companies? Now, before we start, I think it's important for us to know the challenge doing individual stock picking if the individual knows nothing. It's almost impossible. Let me give you an example, right? This is a website called investors.sgx. It's actually a SGX website. So the number of companies that are now listed as SGX is 564. So in order for you to do individual picking, what's the chance of success, right? If you want to pick one, it's like 1 out of 564. Now, bearing in mind that in any stock exchange, including SGX, most of the companies listed are not really good companies. And even if they're good, right now the market is very bullish, they tend to be overvalued. So it's almost close to impossible for a layman walking along the street who knows nothing, right? And you want to pick stock, and then yet you want to make money. It's tough. It's tough. Yeah, we just generally ask anyone out of 10 people, how many people lose money and make money? Most of them will say when they buy stocks, they lose money because they simply don't know. So here we're just talking about companies that are listed at SGX. But what if you're very entrepreneur, you want to venture into US market? Now this one screener called FinBiz, which is free. You can always go finbiz.com. And you can see here, right? This, by the way, is a free website, huh? If you decide to do on your own, knowing nothing, it's going to be tough because in total there are 4,240 companies. Over time, this number may change, but we're talking about 4,000 companies. So how is anyone who knows nothing is going to pick one company out of 4240? It's going to be a very difficult. And because we know the difficulty, because you anyhow pick, you end up losing money. So again, right, the VIA Atlas like attempts to solve this problem so that all of us are educated. So now the key thing is, what are the important features framework right inside this VIA Atlas which would help all of you? Yeah. So I'm going to let before I let my staff play the video, let me just share with you. If let's say I click login, right? Login, yeah, and then I hover my mouse above these my courses. Yeah, you can see there is a US case study, there's a SG case study. So right now we have a database focusing on US and SG only. We do not do any other market because the entire universe market is just too big. Yeah. So once I click on any US or SG, I'll reach this page. Now, let me just share with you, in the entire Singapore, right, we are the only company that has an app or desktop version that looks something like this. Now, take note of where my animation is. Do you see here? Now, if you are interested in company, obviously, we will not want to focus on something that's overpriced or sometimes we call overvalued. We only want to focus on undervalue and fair value. So in other words, as a user, you can actually do multiple selections. One selection, two selection. Then after that, in US, there's 11 sectors. Yep, you can choose any of the sector that you're very familiar, they're working in. And of course, the last one is the price filter. Now, we have this price filter because not everybody has infinite amount of money. Some people only have a few thousand, some people have 10,000 plus. So with limited amount of money, you can't buy stocks where per share is very high, which is why we came up with this feature. Now, let me just say again, in the entire Singapore, we are the only one that has an app, right, that looks something like this. Okay, huh? So, of course, just now I was talking about the app, right? This is how our app looks like. Later, I'll share more about the features of the app. But once I've selected this, so what do I do, right? Yeah, the system automatically will list out all the companies in our database. Yeah, so obviously all the lousy one we have already removed. Okay, so for example, in this case, you see the different sectors that's shown over here. Now, this is the current share price. It's updated every second. Yeah, this is the intrinsic value. Now, from the investing perspective, what do you mean by intrinsic value, right? Yeah. For example, if let's say the intrinsic value of a stock A, B, C is equals to, let's say, US $50. Yeah. In layman words, it simply means that one stock is only worth 50. Now, if one stock is above 50, right, obviously you will not buy the stock when it's 60, 70, right? Because it's above the intrinsic value. So I'm going to write 50 over here. Yeah. So based on value investing methodology, yeah. So when do we buy this stock using this $50 as illustration? Now we will buy when it's below 50. So this is the buying zone, right? Yeah. Now when it's below 50, we said that the stock is undervalued. So this is a term that's very important. Around 50, we will say is fair value. And above 50, right, is overvalued. And of course, as an investor, they can choose to sell. Yeah. And because just now we have selected fair value and undervalue, right? That's why you can see undervaluation is fair value, undervalue, and so on. Oh, it doesn't include the overvalue, right? So under the remarks, there's options. What does it mean? Because in US, there is this instrument called option. Yeah. So as long as there's a column options, that means the stock is optionable. You can write and sell options. So if here is let's say blank, right? That means the stock has no option. Yeah. So let's say if I'm interested in this a technology company called Kaspi, which reminded me of the early stage of Alibaba. Yep, Kaspi. So this is the individual company that I'm going to talk about. So Kaspi. The ticker symbol is KSPI. Yeah. So if we are going to click on it, right? My colleague is going to play a video. What are the things that you're going to see once we click on this button, Kaspi? So I just need my colleague's help to play the video. Thank you. Once you have clicked on the Kaspi case study, by default, you'll reach this page called the Executive Summary or the Enhanced Executive Summary, which is the improved version of our Executive Summary. Of course, as the name implies, Executive Summary is really for busy individuals like yourself, so that you don't really have to spend time doing all the research. Yeah. So for example, in this case, right, you can see before we understand about company, we have to go into detail. Like for example, in this case, Kaspi, what it does under this circle of competence. And of course, a company is considered a good business provided it has an economic mode. And so here there are 3 economic modes, and the numbers over here, do you see? Yeah. And you can see initial published date because this case was published way back in 2023. Yeah, so these are the numbers, and of course, the valuation. Yeah, we are only interested in companies where it's either fair value or undervalued. But the most precious part is here. Can you see here? Appendix, management plans versus actual result. So you can see on the left-hand column, it talks about what the company plan to do. And on the right-hand side, it talks about what the company has done. So it's important for us to invest in a company where they do what they say, which is why we need to have these 2 columns. Just to let you know that these 2 columns appears to be quite easy, but easily you would take our full-time in-house team about 2 to 3 days to extract out all this information and then place it side by side. Yeah, not only that, can you see here the financial highlights? If there's something unusual or something interesting, we'll put the remark in this box over here. So it's not easy for anyone, even if it's a trained accountant, to do all this work. And of course, we are only interested in companies where they are the best of the best among the competitors. So you can see here, Kaspi, who has the tallest bar in terms of gross margin, net margin, and so on. And of course, our thoughts. Yeah. Now, so unless you're going to do this work, which may take you like 1-2 weeks, in our VI Atlas, it has already done for you. So this is usually the first document that I read. And then the second document that I read to save myself time, right, is really the slides over here. So there is this web viewing for the desktop, and there is this app viewing, right, and obviously for the app. So it's slide viewing, you can just click and then the slide will move. But I prefer to choose this app viewing. You can view it just by scrolling as if it's a PDF file. So these are the details over here. And of course, once I'm done with the executive summary and the slides, if I find interesting, I can always watch the explanation. You can see 3 videos over here, COC, fundamentals, as well as a valuation. And if I'm not interested, I can just skip, right, and look for another company. So let's say I left click on this COC video, right? And of course, depending on the Wi-Fi, the video will start to load. So you can see where my mouse is, the bar will start to move, right? Yeah. So let's say I just scroll the video a bit faster. You can see on the top right-hand corner is Alice. Yeah. And she will go deep dive into the case, explaining to you and so on. Yeah, as if a case study is already done, which it really is. And of course, once you fully understood what the company, you want to track their development, right? So you can left click on this latest news feed over here. So if I left click, it may take some time to load. So for example, here you can see 3 months ago, 2 months ago, 1 month ago, 18 days ago, and then 13 days ago. So at the back end, we only screen out 10 pieces of news because if there are too many, it's just too overwhelming. So you can see everything is here done for you, right, in our VIA Atlas case study. Okay, very good. So just now I talked about the VIA Atlas app because just now what you're seeing is actually a desktop version. So I'm going to talk about how the app look like. So I just want to make sure that the slide is in full mode, right? Okay, good. So let's say after you have logged into our app, which is shown over here, you can see my face is here. So this is my personal account, right? So there are two buttons we can click on, whether you're interested in US company or the SG company. So once you click, you can click on this access. So you can see, right? Full IV. IV stands for intrinsic value directory. So the moment I click, it goes to something like this. And the best part is I can select, remember in the desktop version, I can select the criteria. So I click on the valuation or the price filter. If I click on the valuation, this one pops up. I can check off fair value, undervalued. I click apply. Now, just to let you know that if any one of us take a public transport, right? Yeah, from point A to point B, you can just use the app to do this. So it's really very simple. So once you click on, let's say, two criteria, you can see here there's two. And then, of course, you can proceed with the price filter if you want. So you can select price filter, click apply, boom. So same thing, right? Two criteria selected, price filter, two criteria being selected. And what we need to do is we just need to scroll down. So once we scroll down, of course, let's say we found this company called Green Brick Fitness. Again, if you're not an investor in the US stock market, all these things will be very new to you. Imagine how much things that most people miss. Okay, so let's say I'm interested in this company called Green Brick, which is actually a home builder. So you reach a page, something like this. I click on the view case study. This one pops out. Here, very interesting, I progress. It's like studying for exam, the book. We already read like 75% of the book. Click on access, this one pops up. So you can see it looks very similar to a desktop version, except that it's on your mobile phone, right? Yeah. And then the menu bar is here. So if I click on this menu bar, boom, it goes to here, right? So do you realize that here looks the same desktop version? Of course, everything right now is at your fingertips. So I can read the executive summary report in which I've seen just now. Oh, by the way, just to let you know that for the desktop version, the executive summary report is downloadable. So now you can download to your PC and then you can watch it offline. Okay. And then slides, remember, you can scroll up and down. Scroll up and down. And of course, if you want to watch the video, you can just click on the video and then the video will just play. But bear in mind that you need to, like Netflix, right? You need to all turn your phone horizontally so that it's bigger to watch. So do you realize that everything is really right at your fingertips? Yeah. So I'm going to give some specific examples of companies that are invested, which I found via Alice. This is not a recommendation, but I just want to share with you how important education is. Yeah. So one company that owner is this US company called Pulte Group, which is the third largest home builder in the entire US. In short, they build homes. The symbol is PHM. I bought this company about 4 years plus ago during the endemic stage. Yeah. So remember, like just now I said that in order for us to invest in a company, we have to estimate the intrinsic value. And all this information are provided in our case study. So the intrinsic value, I discovered about 4+ years ago, it was $50. So of course, you want to buy below the intrinsic value because it's cheap, right? So my purchase price was here. Bear in mind that nobody can buy here. There's no such thing. Nobody can buy at the bottom and then sell at the top. Yeah, not even genius. It's the Warren Buffett. Okay, so my purchase price was about 44. Right now the share price is about 119. Of course, over time this number will change. So if I use 119 to estimate the ROI, right, about 4 years is 164%. Yeah, and because I'm not a trader, I do not sell at 20% or 30% or 50%. Yeah, sometimes if people speculate, they have been taught they must do this thing called take profit. Yeah. So if they so-called take profit at 20, 30%, while the company is good, you will never see 100%, 200%, 300%. If I could use a metaphor, right, it's like you bought a goose that laid the golden eggs. So after the goose has laid 10 eggs, you decide to take a knife and then try to kill the goose. It doesn't make sense because if the goose is still good, you just leave it alone. If the company is good, you leave it alone so that they can grow to 200%, 300%, and so on. So this Pulte Group. Pulte Group is inside the VILS. You can just type PHM. And of course, another one of my favorite is a very simple business. I'm not a tech person. This company is called Sprouts Farmers Market. Yeah. So again, I discovered it about maybe 4 years plus ago. Intrinsic value estimated at $28. I buy below the intrinsic value, right? My purchase price was about $27. Yeah, so right now it's about 79. Of course, again, price will change over time. So if I calculate the ROI percentage return over the past 4 years, about 190%. Yeah, recently the share price, yeah, but I see nothing wrong with the business. So my plan is to hold this business for really long term. Okay, really long term. So we have already done with one. And just now I show you some of the functions in VILS desktop version, app version, right, for number 2. Yeah. Now, bearing in mind that if we are able to invest in a good business and buy at an undervalued price, then this stock part we'll check off. Check off. Now, bearing in mind that in total, there are 3 sources of passive income. Now, the first one is capital gain. Most of the money, right, at least for me, comes from capital gain. Yeah. And because capital gain is long term, you need to have that patience to wait. And when I say long term, at least based on what Professor Robert Shiller, who's a famous Nobel Prize economist, has said, long term is about 3 to 4 years. Yeah. By the way, there's no such thing as making money short term. Yeah. Short term. So I still remember Warren Buffett once said, stocks are safer in the long term and dangerous in the short term. Yeah. So we always want to focus on long term, and we always see things from the business perspective. We're not buying a stock like a wriggling number. Yeah, because behind every stock there's a business. Yeah. So capital appreciation. If the company do well, the share price will do well. And because the company is doing well, so they will pay us dividend. Okay. Usually for US company, they will pay about 4 times per year. Yeah, some companies they may not pay dividend at all. And for SG company, if they do pay dividend, it's usually 1 time, 2 times, or 4 times. For example, DBS, they pay 4 times per year. Okay. So 1 source, 2 source. Dividend, you still have to wait, even if they pay 4 times, so every 3 months, you still have to wait. But of course, if you have many companies, then every 1, 2 weeks you get paid. Okay, so that's step number 2. So VILS, right, provide the solution. What are the companies you can look for? Because we already have the database for the past 5 years. Yeah, and of course the last one, which is the most interesting, right, which is step number 3. So 1 is done, 2 is done. Step number 3. Step number 3, right, is this strategy called cash flow option strategy. Now, bear in mind that this involves option selling, or sometimes people call it option writing. We never at all costs do option trading, which is pure gambling, pure speculation. We don't do it. So I'm going to focus on this. So in simple term, right, if you sell something, maybe you sell this pen. When you sell a pen, you collect money. When you sell, let's say, this clock, yeah, you collect money. When you sell, let's say, a watch, you collect money. So when you sell instruments, as long as you sell anything, you collect money instantly. You collect cash. So by selling the instrument called options, we collect cash immediately. Yeah, instantly, in fact. So it requires no waiting. So let me just give you an example. Some of our value investing program graduates who is able to generate quite substantial amount of income via option selling. And this person is called Summer. If you look at Summer, I think he's around my age. He's not very old. So you can see, just to let you know that this 12 months. This is not 12 years. So here he state that, oh, my capital appreciation is about 19K. Selling options are 17K, 43K. So total in 12 months is about 107 here in Sing dollars. Yeah, because eventually we convert this USD to Sing dollar. Yeah, so this is Summer, and the rest is actually our vouchers. Yeah, so this is how he look like. If you're interested, you can always go to our YouTube channel, right? And then search for his face. Yeah, his title is How I Made 100K in 1 year, right? Learning value investing with zero finance background. So this Summer. So let me just give you an example. There's just too many. Yeah, this person is called Jessie. I don't think she look old to you, right? Yeah, she's quite young actually. I think if I'm not wrong, she'll be either late 30s or very early 40s. Just to let you know that she doesn't have a job, so she's a full-time homemaker with 4 daughters. Yeah, so by the side, she runs a co-living business, and then she's also a full-time value investor selling options. Yeah, so on the left side, she say a lot of things. By the way, this is a public post. But the most important thing I just want to quote is since day 1 when she joined us, she made a $250,000 over 3.5 years. Yeah, which is 250K. That's a lot. That's a lot of money. Which also means that maybe 10 years plus minus, she should be able to make 1 million. Yeah, so that's a lot of money, huh? So now the key thing is, hey, I getting excited. I want something short term, yeah, without speculation. So where do you find CFOS examples, and then you want to learn more about CFOS at your fingertips. Okay, so before that, let me share with you how it works. Yeah, before we play a demo video, right? So again, we are back to this picture. We talk about portfolio. Yeah. Now, take note. Remember just now I was sharing, right, that if you found a good business, in order for us to invest, that there are only two possibilities. One is you buy here, short form when the company is undervalued. Okay, once you buy here also when it's fair value. Yeah, assuming that it's $50. Yeah, and then on top, of course, you have the stock you may consider selling right when it's overvalued. Yeah, so how does a CFOX work? Now, in simple terms, is options, right, has two categories. One is called puts and calls. Now, I will not go into detail because being a member, you can always watch the explanation of the calls. Yeah, so remember, by selling something, we collect money. So in other words, before we have the stock, we can sell put, sell put, sell put. And then when we sell an instrument, this instrument has an expiration date, it may expire. Yeah, it may expire, or sometimes it get exercised. Then you have the stock. And then when you have the stock, you can choose to sell call option. So these are the strategies that will only be explained if you are our value investing program graduate, right? Or you are our VIA Atlas member. Okay, so you sell call, sell call, sell call. Just take note, whenever you sell something, you collect money instantly. So there is no waiting. Sell call, your call options get exercised, and then you have the stock. Yeah. Okay. So the VIA Atlas itself has some solution. Why? Because in order for us to sell options, there are a couple of challenges. The first challenges is what are the companies for us to sell puts or sell calls, right? What strike price to choose? Oh, some technical terms, and then of course, what are the expiration date? Yeah. Yeah. So the next video in which my colleague is going to play an attempt to address all these three questions. So I need my colleague's help. After you have logged into the account, remember the first tab and the second tab is for us to search for good, undervalued, or fair value company. And of course, we always move to the third button. Yep. So once you click on this tab, my US case study membership portal, just scroll down. So these are some of the features that I've explained just now. Let's continue to scroll down. Remember, VIA course, CFOS revision over here. And you should be able to see this CFOS bonus online live. Now, these are the past recording when we meet up with our subscribers via our inner circle meeting. So for example, if you become a subscriber today, you'll be able to access all the past CFOS case study that we have reviewed immediately. So let's click on go to course. So once you click on this, a new tab appears. Yeah, and of course, we can select whichever day that we want. So do you see 30th Sep recording, 29 May recording, 27 February recording, and so on. So let's say if we refer to this inner circle CFOS live, which is our meeting, dated 29th of May, 7:30. And let me just scroll the video so that you have an idea of what usually we're going to put a disclaimer. And I'm just going to scroll through quickly so that you are able to see what's happening. So you can see types of portfolio. So I revise again. Remember, selling puts, selling calls, how to construct a portfolio. Yeah, and then after that, I'll bring up our first author, who happens to be Zheng Hong on this day. And Zheng Hong talked about this company called Synchrony Financial. So if I go through, do you see? Lots of details. And remember, this is a shared live. In other words, you'll be attending our gathering. You can ask questions and so on. You see, there's a intrinsic value calculation. So everything about Synchrony Financial, very detailed. And of course, that will be the first speaker. After Zheng Hong has completed, usually there will be a second speaker and so on. So you can see Zheng Hong, May 2025. A bit. See, this is a syllabus. Do you see? Introduction by Cayden, Zheng Hong, and so on. So I start talking. Yeah, so I share with them how to use the VIA Atlas, some of the initiatives that we have. And let me scroll down to the back. Scroll all the way to the back. This is some of the case studies that I talked about. So for example, the first one I talked about Mastercraft. CFOS for Mastercraft, how to sell options, how to sell calls. Then second one, Malibu boat, and so on. So usually for every gathering, I'll share about 8 CFOS opportunities. And out of the 8, quite a few will be my own personal experience, because some of the graduates, they may not know what to do. So it's important, right, for all our subscribers to attend our inner circle meeting. So I have already covered the portfolio. Yep, here to extreme end, if we choose this one, and we need stocks, we need to know what companies to look out for. So VILs provide a database of companies which are good and undervalued. You can always use our screener. And then we explain what is capital gain, what is dividends. These are the benefits. And of course, step number 3, we talked about selling options. When you sell something, you collect premium. Yeah, instant cash. CFOS stands for cash flow option strategy. Yeah. So some people may say, hey, but I've subscribed to website A, I've subscribed to website B, but just online, right? Is there something live? Is there some ongoing support? Now, let me just share with you our unique structure that is never found in any other companies. Definitely not in Singapore. I'm not very sure in Asia that there is any, but I do not know any. So let me just share with you how it works. So let's say today is the 1st of January. You decide to become our exclusive member, only with VIA Plus, okay? So what's going to happen, right, is once you join us today, let's say 1st of Jan, now every single month, we will deliver 2 companies into your inbox. Yeah. And these companies, it could be new companies that we have discovered. So we upload the case study, right? You saw the menu bars. Or it could be a companies that is already in the database, but we find we need to go back and revisit. So we upload the case again. But whichever it is, review or new, every month, right, we deliver 2. Yeah. Then, so this form Q1. Then at the last 1 or 2 weeks of Q1, we will meet. Yeah, we will meet. We are the only company that does this. So we meet online because some people may be residing outside Singapore. So during the meeting, right, you may see people like Ali. Remember Ali just now he came? Yeah, so we may decide to look for 1 author or 2 authors to share 1 or 2 companies, which are new updates. And then after that, of course, after the presentation, you can always do Q&A. So this is live, or this is not really recorded. But what if during the inner circle meeting, you're not free work or whatsoever? So don't worry, you still record that portion, and then we'll upload into our VIL. So you will not miss anything. But the most interesting part is after the presentation by the 1 or 2 author, right? In which I'm going to talk about selling option. Later, I'm going to explain in detail. This is the most exciting because here we're talking about instant income. Yeah. So of course, at the end of the day, our structure, right, of VILs, we want to solve a couple of problems. Number 1, what companies to sell options on? We have the database. Which strike price to choose? I'm going to explain later on. What expiration date to choose? So here is 1 year moving forward. 1st of Jan until the last day of December. But we have started VILs since the pandemic time. So in other words, not only 1 year moving forward, right? You will have access to our database for the past 5 years. Yeah. And remember, for US company, we're talking about more than 4,000 companies. Yeah. So our in-house team, we actually remove more than 95% of the companies because most of them are either overvalued or most of them are really big. So we end up with 120 companies. And of course, over time, when the companies are good, it becomes more and more overvalued. And this number percentage undervalued eventually will change. Yeah. So I'm going to pause here for 5 seconds, right? If you may, you can always do a screenshot. Just to let you know that in the entire Singapore or probably even Asia, we are the only company that has this structure to help or at least we care, right, to make all of you a better investor. Okay. And of course, you can access all this information via your app, and we are the only app around. It's like VILs in any mobile phone. Yeah, we are the only one. So now let's pretend that today is the inner circle meeting. And Ali, let's say, has already done 1 presentation. Then after he has done, you eat me, right? So I'm going to talk about the option selling, but because of time, I cannot talk about 8. So I'm going to talk about one. So how does it work? Yeah, so again, disclaimer, I'm not going to read, I already read it in the very beginning, right? So I'm going to go back to the company that I mentioned called Caspi. Now, just to let you know that this company is actually founded in Kazakhstan, but listed in US, okay? So in case you are a graduate, this will look very familiar. But in case you're not our graduate, it's more important that you need to pay attention to what I'm going to say, okay? Now, let's say you found this company called Caspi as an illustration, not a recommendation, right? And then you have calculated the intrinsic value. I'm going to draw a diagram. The intrinsic value. let's say it's 70. Yeah, 70, right? And let's say right now the share price is 76. Yeah. Now, if the intrinsic value is 70, the share price is 76, obviously you cannot buy because you're overpaid. So you only want to buy when the share price touches 70 or below, which is this shaded region over here. Yeah. So you can see this number 70, right? Now, what this simply means that if right now the share price is 76, you cannot buy, right? But in the options world, it's quite interesting that you can make a reservation. Now, what do I mean by making a reservation? So let's say weekend you go to a restaurant and then the restaurant is, yeah. So usually you can talk to the manager, hey, I'm going to leave my name, mobile phone behind. If somebody left, there's an empty table, please call me. So they can come back lah. But before that, at the stage, you let the manager know, right? So you're making a reservation. So in the option world, you can make a reservation, huh? So in other words, you don't want to buy at 76, but you only want to buy at 70. Hang on, you only want to buy at 70, right? Yeah, which is why here is 70. But of course, you can choose to buy at 60, you can choose to buy at 65. But I'm going to use 70 as an example. So an interesting thing is you use this online platform, which can be any platform, Momo, Tiger, TD, Ameritrade. You can use this platform to make a reservation. So in other words, you give instruction to the system that, hey, right now share price is 76, but in one day, yeah, it reaches and it touches 70. Please help me to buy. Anything above, please do not buy, but only when it touch 70 and below that help me to buy. And the interesting thing is when you submit the reservation, you get paid. So you can see here, right? You get paid $1.10. Now bear in mind that this is US dollar. Yeah. So you can sell the option. Selling option is just making a reservation. So in the world of options, right? You cannot sell one option. You have to sell in multiples of 100, which is called one contract. Which also means that if you sell 100, you do not receive 1.1. You receive US 110. Yeah, so this will be the regular income that just now Summer and Jesse got. But of course, this is just illustration, a very small amount, right? So let's look at the ROI. ROI, right? So how do we calculate ROI? You just take this 1.1 over here, divided by this 70. So 1.1 divided by 70, yeah? There is 1.57% per 16 days. How do you know 16? 16 is here, right? So let's say if I prorate this 16 to a month. So we are talking about 2.95% per month. Yeah, I'm going to pause here, let you digest for a second. Now, without selling options, can you just tell me what other instrument, non-speculative in nature, you can get 2.95% per month? And if we extrapolate, annualize, we are looking at 35% per year. Yeah, using value investing, or rather cash flow option strategy. Yeah. So these are the things we talk about during the inner circle meeting. Then, of course, I will give another illustration. Yeah, if the reservation is not 16 days, if the reservation is 44 days, then this is the premium that I collected. It's for one option. One contract will be 160. I divide by 70. So you can see 1.6 divided by 70, right? So this is 2.29% for 44 days. But if I prorate it to 1 month, it'll be 1.56%. I annualize it, will be 18.7. So in real life, every month I'll set aside maybe 30 minutes to do all this. Yeah, one company usually take me about maybe 3 minutes. It's really not a lot of time. Yeah. Yeah. So at night, my full-time job is actually to sell options. Yeah. So if there's a scenario A, which is to choose 16 days, if there's a scenario B, right, which is choose 44 days, of course I'll choose 16 days. Yeah, because here the ROI is higher, right? Yeah, ROI is higher percentage, but the absolute will be smaller. So this one US, I will collect 110, and this one US, I will collect 160. Yeah, out of the two, I'll choose this one. Yeah, because 35% almost double 18.7%. Yeah, so this is one scenario of CFOS that we're going to talk about if this is an inner circle meeting. Okay, but of course, in the inner circle meeting, actually I talk about it. So not enough time. So let me just move on. And I'll talk about other things, So okay, this is my stock mastercraft. I talked about how to sell out of the money call. Yeah. Another one, mastercraft, I talk about how to sell in a money call. Now, in case you do not understand this term, this simply means there are a lot of things you need to know. So it's not so easy. People tell you stop it, you just press buy. No. It doesn't work that way, right? So of course, in the inner circle meeting, we don't talk about one, we talk about 8 option selling illustrations. Yeah. So I think it's important, right, not to hear from me. but to hear from our members how this VIA Atlas has totally transformed their life. So I'm going to introduce this person called Jocelyn. Jocelyn has been with us since 2020, the beginning, the birth of VIA Atlas. So let's hear what she has to say.
When I joined the US case study that I subscribed, my income grew by another 18,000. I am Jocelyn. I am a US case study subscriber for 3 years. I subscribe because I am a very slow learner, and Cayden said that everything is done for us. So I said, okay. And also, I got a lot of things to do because I'm taking care of my family. So this is easy, then I just follow. The US case study, each time when the thing is put up, it was very fascinating because I knew nothing about US stocks. And I didn't know that that's how it's done. And what I like was Cayden talks about the IV and all that. And so that gives me like, oh, okay, now I know which one to buy. Oils, last time I was always dependent on my friends or my remisier telling me to buy. But now I know this is the one that is, at least it is now at that price, which is a good price. That's how it helped me. Before I subscribe to US case study, I make about 25,000 a year. When I joined the US case study that I subscribed, my income grew by another 18,000 a year. I have very short memory. So as a subscriber, so I can go anytime into that and watch again when I don't understand. So that's why I like about it. The authors, they're very good. They did a very thorough research. So some of the news that they gave us was like, wow, this company do this. I never know got such companies. So yes, really I admire them. You are busy and you are the investor type. I'll say, hey, I think you won't regret because in the long run, everything is done. And then you can go again and again. What else? What else do you want, Whereas if you have done something on your own, you might forget what you have searched. Well, especially for old folks like me, one day later forget, whatever was told to you. So sometimes I tell my mom, wait, let me check again. So the thing is there, right? You can just on the thing, look for it, get the information.
So we already talked about, of course, step 1, step 2, step 3. We have shared Jocelyn as one of the many examples of how VIA Atlas have helped her. Just now we talked about ongoing support, right? So maybe just a recap. Yeah, so these are the things that we do, right? 1 year forward. Today is the 1st of January. And of course, you have our database for the last 5 years. So total is actually 5 years plus 1 year, so 6 years. 6 years of effort, or we full-time staff are doing all this work for you, and you can access it tonight. And of course, just now we talked about the CFOS opportunity, and in fact, you can access it tonight, via your app. Okay. And the next slide that you see here is actually the team involved. So I'm going to pause here, give a few seconds to digest. Yeah. So even with the emergence of AI, in which you use AI to look for companies, you still need human because AI sometimes also not very accurate. Yeah. So this is the entire team who are behind supporting you. So you can see I'm here. So this photo is taken at our office. So I'm really proud of our team, right? And we also have a team of analysts. Now remember Ali again, it's on the left. Alice, just to let you know that she's a vice president of a very large company. Her background is accountant. Yeah, helping us to analyze company with Dr. Betty Fan with a PhD. Yeah. Zhen Hong, just to let you know, here he's stated assistant analyst. He's also a business owner. So in other words, nobody can know every sector, every industry. We need a team of people. So all our existing subscribers or members, right, they are standing on the shoulders of all these geniuses. Okay, so I will talk about this, right? Sell put, sell calls, and so on. And of course, VIA Atlas are predominantly to solve these 3 problems that are shown here. 1, 2, and 3. Yeah. So we're done with this. So I'm going to show you a very important table, right, that is shown over here. Now, this one I need to slow down. Now, remember our database for past 5 years, we focus only on US, right, and SG. So I'm going to spend some time on this table over here, right? So you can see, here, do you see US? I put a flag here so that it's easier for you to identify. Yeah. So if you're interested to access the database today, so that the next 5 years of your life, sorry, rather the next 1 year, you don't really need to have a headache because everything is all done for you, right? Database. Now, you have 2 choices. One is US Gold, yeah, which is shown over here. Let me just draw a line here, right? One is US Platinum. Now, Platinum consists of Gold US as well as Singapore. Okay, so let me just go through one by one. This one I really need to spend time. Now, first thing, right, is once you decide to focus on US, whether is it US Gold or US Platinum, you have immediate access to 120 companies of our analysis, our database. So that's number one. And moving forward 1 year, right, we'll deliver 2 in the inbox, which is 24 companies per year. Yeah, so remember 5 years of our past hard work and 1 year moving forward. Okay, yeah, and we have our inner circle meetings online. Remember I showed you the timeline, right, where you can talk to our authors. And just now I talked about CFOS illustration, right? So remember, we meet 4 times per year. In the whole Singapore, we are the only one. And then if you access via your desktop or mobile phone, you can have access to our site. Okay. Our executive summary, right, is totally downloadable into your PC. Now, this is very important because the time is so precious, right? Yeah. Now, then, of course, whenever a new case study is uploaded, we'll send you reminders. Okay. And remember, just now you show you the screen. You can select undervalue, fair value. You can select any sectors, there's price filter and so on. Yeah. And then you want to learn about building a portfolio. We have this. You want to learn about sell options today. Yeah, you can have access. And then whenever there's any news, we will WhatsApp you. Okay. And if you want to learn about value investing, it's also here, online module. But of course, if you want to learn full-fledged, it will be good for you to attend our on-site value investing program. This is also suitable for our existing grad revision, right? And in case you're not free to attend our inner circle meeting, our recording is here. If you are our grads, usually every month we have a gathering, our recording is also uploaded. Yeah, so we have everything over here for the goal. Okay, whether it's gold standalone or gold, right, platinum. Okay, now in case some of you want to like diversify, because some people worry about the currency devaluation in US, maybe I want to look at some Singapore companies. Yes, we also have. But because the Singapore companies are listed are not many, which is why you see our database 60, half of the goal. Okay. And then here every month we deliver 1 company versus 2. So 1 year is 12. Yeah. Now our meeting instead of 4 times, right, will be 3 times. And then not only that, my co-instructor, who is also a good friend of mine, I think I've known him for 15 years. Liu Feng, right, will also appear and share his thoughts after each author has shared their presentation about the company. Now, just to let you know that in case you're not a grad, you may not know who is this Liu Feng, right? Just to let you know, Liu Feng, as the name implies, you see, originally he came from China. So right now he's a Singapore citizen. He graduated from the #1 university in Asia called Peking University, Beijing 大学. Okay, so he graduated with a ACCA, which is the accounting qualification, right, as well as a chartered financial analyst. Yeah, so just to let you know that Liu Feng is a full-time value investor, and he make all his money, right, investing in a SG listed company. Yeah, and just to let you know that he is probably the only person that you will eventually know in your lifetime whose hobby, right, to read annual report, and his collectibles are actually annual report. So very rare person. Yeah. So he's actually the advisor for our VI Atlas for the Singapore company. And in the entire Singapore, we are the only company that has this structure. Yeah. Now, by the way, all my money is in the stock market. Liu Feng's money is in us. Okay. So remember, 2 choices. Yeah. Gold standalone or platinum. Gold plus SG if you feel better. Yeah. So diversified. Okay. So again, let's hear from our next member, who is Dominic, and he's going to talk about how important VIA analysis. Yeah. So my colleague, please, thank you.
For now, my ROI is about 5 to 10%. following the case studies alone. Hi, my name is Dominic, and I've been with VIA for about 3 years, and I started the case study since the first time it was launched, so it's been also about 3 years already. I subscribe to US case study because it's easy to understand, it's fast, and it saves a lot of my time, and you don't have to think so much about it. Someone has done the analysis. Previously, I also know how to invest, but it's really only something that to my competency level. But when you join the case studies, there's many genres. So you get to understand other trades and other industries that I have already personally also invested, which I do not have any clues, but because I learn about it and actually I get to like them. So to me, it's really expanding your exposure, expanding your portfolio to different risks. So usually when I've done my own evaluation, right, it will probably takes about maybe sometimes takes 2 days or something like that for you to go through a lot of things. But of course now with the case study, it's like 30 minutes. But if I'm really interested, I just need to zoom into the point. You just need to actually take maybe 10 minutes just to double check that part that you want to understand more. In my portfolio, right, 100% of the stocks, right, comes from the VIA case studies. Like I said, I don't really have time, so it really helps to save a lot of time just to go through the analysis from the subscription. So because I think the authors are also from the same team before we joined Cayden and his team, so we have the same common set of values, which is value investing. So when the authors are someone who will share the same sentiments as me, so I think I really trust them to do the case studies. So I think first of all, go to the master class first and understand what's the methodology that they use, and then with that you will understand how the case studies are developed because it's using the VIA systematic methodology. That's how I joined VIA first as the batch before I subscribed to the case study.
Yeah, so remember your two choices, either go stand alone, you show over here, or the platinum. Okay, now again a quick recap. Yeah, so these are the things. Now, so just now I just happened to see a message, right, about like subscription and so on. Now, just to let you know, if you hear what Jocelyn had to say, you hear what Dominic has to say. You know, 5 years of research work and 1 year moving forward, it's worth a lot. Yeah, but I don't want to put a huge number, which sounds like an exaggeration, right? So I'm just going to put the value. Yeah, because value, investing value, right? So if a pair of shoes, 1 kg of gold is worth 16,000, let's say, 1 kg of gold is worth 16,000. So as an investor, right, how much do you want to pay? Yeah, of course, as a value investor, you do not want to overpay beyond 16,000. You want to underpay. Yeah, when it's under value, right? Now, so in this case, to help all of you, at least you have a taste and benefit of VI Atlas, right? Just for tonight, we have something special for you. Now, the subscription fee for the US case study standalone is US 1632 per year. Now, this is US dollar. And if you convert per month, it's 136. Yeah. But for some of you, this could be quite a substantial amount of your savings. So we decided, right, at least for me and my colleague, we decided to do a special discount, which is a 50% discount. So today, before 2359, right, we are very on time. So what we're going to do is we're going to go for a 50% discount. So instead of 1632, it will become 816. So 1 month is only 68. Now, so this is a small investment for all of you. Now, bear in mind that if you look at Summer, you look at Jesse, their return is really substantial, which is more than 100,000. So of course, this US standalone, but if you're interested in the platinum, yeah, we also have a special offer. Okay, ready? Now, remember, Go Standalone original is this. You have immediate access of our data, which consists of 5 years of effort and then moving 1 year ahead. So 5 years plus 1 year moving forward. And then we do a 50% discount will be 816. So every month will be US 68 and it's by 2359. So that's gold. And then if it's platinum, which is consists of US gold and our database is SG. So originally it's 2312. Yeah, we're going to give you our database of 5 years of case study immediate, right? And of course, we're going to minus 50%. So you end up with 1156, and then per month is 96. Now, bearing in mind that if you are really educated, you can easily make 5-10 times more. This. Yeah. So I'm going to give you another example, right? But this time round is another one of our member, and her name is called. Yeah. Thank you.
My subscription fee, I get it back within 1 to 2 clicks. Okay, I'm Julie. I'm from VIA Graduate Batch 31 and I work in a healthcare company. The reason why I started to subscribe to the US case studies is because of time. I realized that we need a lot of time in terms of doing the research, the filter, the analysis. Sometimes it's very difficult and very tricky. And it's not just as simple as 1, 2, 3. If we have a team who can actually do a good job in doing all these things and monitoring them, why not? It's less than a proper like 10-course dinner or a dinner that me and my friend are going later. You know, it's like or lunch or high tea or whatever, and you have a peace of mind. Like you know that these are the value companies, and you know that this can be part of your portfolio. US case studies is not just about presenting the 1 to 24 studies, 2 studies a month, and then they will forget about it. If you realize that they actually go back to reanalyze some of the case studies that they have picked up before, and then review again, is the fundamentals still there? Are they still earning? Do they still have good management? What have they done for the past year? Have they met the criteria or the promise that they say that they're going to meet? Now that I've found out this value investing part can be part of my portfolio, right? Let's say 25%. I have the other 75% that I need to look into. But I know value investing is important, it's the fundamental, it's the base, right? But once I found out this time that I don't need to do or search the world, for the companies, which I know that a very dedicated and very good team will do that, I can actually use my time for other things. Other than venturing into other types of instruments and investing, I also have more time for my family. I do not want to sit there and search for things, rather than sitting down and looking at, what is the company to invest tonight. ROI that I gain from value investing and plus CFOS and the US case studies is about 15 to 20% per year. And it's like 1 to 2% per month. After subscribing to the US case studies, it's very structured. These are the companies that has been picked up and searched and researched and analyzed by a dedicated team with all the knowledge that they have to make sure that it's really a value company. So after that, it took me only about like maybe half an hour to 1 hour. So these are all the benefits that I have because I don't have to worry. It's like a peace of mind. I don't have to worry about is the company good or not. I know that the US case studies, all the company will be value company. But whether I want to invest in them because it's value company is my due diligence.
So let me just do a very important recap. So just hang on there. Now, it's important for us to recognize that if we don't invest, unlikely we're going to make it. Yeah, unless all of us really choose to work until age 70, send out a resume, right? When the re-employment age increased to 70 by 2030. I don't think most of us desire that. Now, whether we like it or not, that age is going to come, and then we have to face it. Yeah. So instead of waiting for the day to come, it's important for us to prepare for the day. So how do we prepare for the day so that we retire earlier with more money and then we have a better life? Yeah. So in order for us to prepare for the day, remember there are 3 important steps. Now, step number 1, I've shared here, right? It's important for us to know which kind of portfolio, right, do we need to have. What kind of investor? Passive investor, active investor, or a hybrid investor. So I belong to the hybrid, C for cayden, right? So once you identify the end in mind, you want to build a small empire business so that you no longer work for the business, but the business work for you. Yeah. So then you have to answer then what kind of business? You want business work for you? What kind of business, right? Yeah, unless you are our value investing program graduate where you can do your work, then you still have to find time. And the worst thing is if you're not our value investing program graduate, you do not know anything about businesses. I mean, how are we going to invest, right? Yeah, which is why it's important that VIA analysts are around you so that we can walk alongside you, so that you know what are the companies to look out for. We already have a database. Yeah, you can revise through the training using the modules that you have. So that at the end of the day, you learn more about capital gain as well as dividend. So this is the first source of passive income. This is the second source. Now, then the third one, which is the most interesting, right? If you want to sell options, where you sell something, you get instant income. It's important for all of us to learn about cash flow option strategy. So there's an online module. And remember, just now I talked about ongoing support. It's not just you log into the system and then you're on your own, you know. Yeah. So remember, if let's say today is 1st of Jan, you are a exclusive member. So remember, every month we upload 2 case study, which could be new one, which could be reviewed one. Yeah, then we have a live inner circle meeting. If you're not free, we record it and then we upload to VILS. So you can meet 1 or 2 of our authors. Yeah, you can ask them questions. You can also ask me questions like what you're doing right now, right? And I also give illustration of 6 to 8 CFOS illustration. This is very important. And then we'll repeat this. Yeah, and then we'll repeat this again, repeat this. So this 1 year moving forward. So this 1 year of research work. Yeah, unless you want to spend 1 year doing this. And then not only that, you have a immediate access to our 5 years of research work. So it's 5 years plus 1 year. Yeah. And then of course CFOS opportunity. And then not only that, you can have access to our database at your fingertips. And just now we talked about this page, right? So maybe I'm just going to leave this page here for a short while, right? Now, so remember, gold and then platinum. Now, whether you are grad or non-grad watching this, I think to be fair to grad and non-grad, we will still commit to that 50% discount. Yeah, over here. Huh? Now, bear in mind that this is by 2399. Yeah, for both the gold, right, and then platinum, which also means that if you happen to copy the link and then after 2359, you're going to revisit, you'll see the price, suddenly shoot up. Okay, huh? Now, because at the end of the day, we want to reward action takers. We do not want to reward the procrastinators. Okay, so I'm going to leave this slide over here for a very short while. In case you have any questions, right? My team can still handle. Yeah, handle, huh? Yep, so I think I saw the link is being posted there. Yeah. Okay, so I'm going to just pause it for a short while. I can still see there are still people inside the room, right? Hey, by the way, this is my last second slide because the next slide I'm going to show you is just here. Yeah, Ali has already went back to rest. Yeah. Yeah. So we really want to highly encourage you, right, to join our VI Atlas. Yeah. So let's say after 1 year you decided, or you already build a portfolio, you realize it's not so useful for you, you can always discontinue after 1 year. Yeah. Oh, then in case some of you have a question, right? Oh, there's one common question. Let me just go back and ask, right? So for example, let's say after 1 year, because this A16 is 1 year forward, right? After 1 year, so what will happen? After 1 year, would it be like renew for another 1 year with the same amount, or because I'm a loyal member, right, that there will be a discount? Now, just to let you know that after 1 year, right, there's actually a discount. I can't remember really the exact number, but if I remember correctly, maybe like a 30 plus 40% discount. Yeah. Then after that, the third year, you'll be further discount. So our philosophy is quite simple, right? Is as long as the person, the member, stick with us, we always want to make it cheaper for that person. Yeah. And just to let you know, in Singapore, we're the only one that people stick with us, we make it cheaper. Yeah. Versus other things, when you stick with them, right, it become more expensive. Okay. So I think it's about 30 to 40% discount. Okay. Yep. So I'll let my teammate address any question. Yeah. And then I'll leave this thing here for a short while. I think maybe what I will do, right, is I can ask my colleague to play the video. Let it just loop, right, for 5 minutes. Now, we will not end the webinar yet. We'll just play a video maybe for about 5 minutes. So after 5 minutes, the team are still addressing any question. If you have any question, you just post. There's still a team behind our office addressing any questions. Yeah, then after 5 minutes, we have to end the webinar, so that you can have a good rest. Okay. Yeah. So I let my colleague, yeah, play the video. We are still around, so don't worry. Yeah. So don't worry. You should be able to hear my voice, right? Yeah. So I'm still around, except that we are playing this video that is looping, right? So if you have any question, just type in the chat. Yeah. So I just need the team, right, to answer very quickly. Yeah. So I just need the team to answer very quickly. Yeah. So I'm still around. Don't worry. If you hear my voice, that means I'm still around. Yeah. So I will also help to answer some question. Yeah, I'm still around. Yeah, I'm still around. Okay, I can see questions, and then we are still replying questions. Now, in case you're talking about the 4-day value investing program, right? Yeah, discount is only available for immediate next in kin. For example, husband, wife, father, mother, whatever. But if it's other than immediate, there is no discount. Yeah, I'm still around. Okay. No more, huh? They're knocking off, huh? Okay, so remember technical at mygames.com, right? Okay. See you.